Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Wakarkadash. Double honors to the elders who preach this word truthfully and sincerely. And shalom to the Akim scattered through the four corners of the globe, preaching the word truthfully and sincerely. And I say shalom to your Akim out there. And this is a recent news article from RT.com. As of February 23rd, 2023, from the World RT World News Alternative World News around the world in a business news category in the financial area. And it reads, U.S. Feds warns of more rate hikes. And it says the federal meeting minutes. The federal meeting minutes shows that the officials are still concerned with inflation despite the recent slowing. And it says the U.S. inflation is showing signs of slowing, but not enough to allow the Federal Reserve to ease monetary policy. The regulator's February meeting minutes released on Wednesday shows, according to the document, inflation in the country remains well above 2% target, while labor markets remains very tight, contributing to continuing upward pressures on wages and prices. Participants noticed that the inflation data received over the past 3 months showed a welcome reduction in the monthly pace of price increasing, but stressed that substantially more evidence of progress across a broader range of prices will be required to be confident the inflation was on a sustained downward path. The minutes said nothing that ongoing rate hikes will be necessary. At the meeting, the Fed approved yet again a 25 base point increase, bringing the rate to a target range for 4.5 to 4.75%. The extent of the upcoming rate increase has not been revealed, and the minute shows the officials are dividing on the issue. However, in an interview with CNBC, St. Louis Fed President James Bullard suggests that a more aggressive hike will give the regulator a better chance to rein in the inflation at a faster pace. And it has become popular to say, let's slow down and feel our way to where we need to be. We still haven't got to the main point where the committee puts the so-called terminal rate. You'll know when you are there, when the next move could be up or down. Our risk now is inflation doesn't come down as re-accelerates. And then what do? Let's be sharp now. Let's get inflation under control in 2023, he said. And he says, it says U.S. inflation somewhat cooled in January, rising at a rate of 6.4% and up 0.5% from December. Analysts predicted another quarter-point rate hike in March and 2 more later in the year to bring the indicated peak of 5.25 to 5.5%. Market experts, however, warned that if the regulator rushes the heights or bring the rate too high, the economy could plunge into a recession. Right. So this been happening, and they've been mentioning this numerous of times throughout the whole year of 2022, now entering in the year of 2023 so far. They was continuing the objective, and they continuing down the path to ease the inflation. But then you got the same time the Federal Reserve continues to increase the interest rates. And then the more they focus on the tensions of the main objective to ease the inflation, but then at the same time they gotta look out and be careful of plunging the economy as well too. But according to experts, they said even if it risks the economy to getting into a recession, they'll be fine with that, which is kind of mind-boggling. Because you look at the fact that even though the inflation been cooling down since the month of December and January of this year of 2023, but it's still going to show a increasing sign. The economy is going to continue to slow down and heading to a possible increasing recession. So that shows you that another sign of modern day Babylon spiritually is definitely falling on the economic sense. So as we see, the Federal Reserve, they had their meeting as of yesterday, I believe, because yesterday was Wednesday and today is Thursday, and yesterday was Wednesday. They had that meeting. So even if they had the inflation cooled down a little bit, it wasn't increasing high. But still, at the same time, you still have the inflation still increasing. And then the Federal Reserve still increasing the federal interest rates. And still, the economy can possibly go into a recession. And it's been growing even more and more and more, within the past last year as we're entering in 2023. So we're definitely getting a further step closer into the economy continuing to slow down and entering a recession. Along with the inflation going to continue to increase, the consumer spending going to continue to increase, and the gas prices and the oil productions as well too. And all these kind of react and this is what the markets kind of reacts to, if it's going to have a positive gain or had a solid gain. Just like on, I believe, Tuesday afternoon, when you had the markets reacting to these situations of the Federal Reserve having these meetings, and the markets have crashed. The Dow Jones and the S&P 500. Right, when the Dow Jones and the S&P 500 and the NASDAQ Composite, they all fell that Tuesday afternoon, especially the Dow Jones. I believe it was negative 697. And yesterday, they had a solid gain, but it had crashed once again. And I believe that was like negative 85 points. So, we're going to see how the way the markets react as of today. And during this week of Thursday and Friday as well too. So after hearing this news, so they still have the Federal Reserve as they had their meeting yesterday. They still have that highly likely chance of concern of the interest rates going to increase and the inflation going to continue to increase as well too. Even if it come into data statistics showing that the inflation eased a little bit, but they still have concerns of the inflation going to continue to grow, even at it's slowing down at a slower pace in the whole month of January and December of the data statistics shows. So they still concerned about the inflation going to increase right along with the potential of the economy entering a recession as well too. So that's another clear example. Like I mentioned in my video 2 days ago, that's another increasing example of modern day Babylon. It's modern day spiritually Babylon is falling on an economic sense. So, you know, just like the reserve of the American dollar, that's soon to be no more value. As you see, you know, the other countries of these other nations spoke about, you know, they are not depending on the American dollar no more. They don't look at it as a top global current reserve of the greenback dollar, of the American dollar, along with the euro dollar as well too. As we're getting further and further closer to the of this fully digital currency being fully displayed to the whole world. Now we're seeing signs of that. We're getting a further step closer into that. You know, that's the MOTB of the charagma of the digital currency of the paper dollar is going to be a thing in the past, and everything is going to be full digital currency. As we live entering the new age of technology, keep that in mind as well too. But as far as, you know, you're still going to have the continual interest rates going up, which they're going to continue to push as their main objective, just like they did throughout the year of last year and all the way into this year. You know, their main objective to continue to ease the inflation, even though they're going to raise the interest rates. And then the economy going to potentially entering a increasing recession as well too. So once again, that's a clear indicating that modern day Babylon is definitely falling on the economic sense, you know, as this trend continues to grow more and more and more. So with that, hopefully this sit down lesson was edifying. I would like to give all praises and glory and honor to Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Wakarkadash. Double honors to the elders for preaching this word truthfully and sincerely. And shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely. And until next time, I will say shalom.